Alright, I'm back. And to start off today, I'm just going back to see at a post I did back on General Electric in April 12th, 2015. And here's the exact post on my blog site, Badcharts.com. And what we had here back in the days was sideways move action and then a breakout to the top, and I had a target of 3250. Back to a wall, previous support turn resistance back in 2008. That seems to be when we had that big downwards move there. All right, so let's go take a look at the chart, what it did over that time. Here we go. And even better. All right. April 2015. Let me backtrack. Black border. So we did not have the breakout back then. That's why I always say to wait for monthly candles. Wait for monthly candles before confirming the breakout. And sometimes I post charts because I get alerts during the month. The candle has breached the resistance. And I always come back to it at the end of the month to see if that candle reversed the price. And it did. The market was not ready for it to break out in that matter at that time. All right, so let's see what happened after that. More ranging. On the weekly, you could have thought this was a breakdown, but on the monthly, the price went back up. No worries there. Oh, okay. Maybe this is the breakout this time. This could be the breakout. What I don't like too much is nearby resistance. So there's two things right now I think I could have done with that. Either consider this my breakout line, my shorter, closer breakout line, more probabilities of reaching it. Right here. Would be a target of 31. Or I could consider this the bigger pattern, and that would be my further away target. And I would put alerts here. And right now, that shorter target is below the wall here. That breakdown under support, now turn resistance, and the further away target is right smack close to it. That candle, that's my risk. I would enter here at 29, sell stop all the way inside. Not very good. Probably not play this stock, not an A++ because the risk to reward is not skewed in my favor. Let's just see how this would have moved on. First target would have been reached on second month. Again, further away targets, less probable chance of reaching them. And we would have had to wait 1, 2, 3, 4, 5, 6, 7, 8. See, you have to wait 9 months for that second target for a 1 year, 2 year consolidation pattern, 2.5 years. Close target would have been out 2 months. And the other one, you would have had to live a drawdown all the way back. This could have got scary here. But since your sell stop is deep inside, you would have been okay, but you would have still probably, if you're still working on your emotional IQ, this could have been a stressful situation. Monthly bars, that's a lot of time there to spend here. Next month goes up, and then you get close. So close, didn't make it. Then it starts reverting to almost 50% retrace from your entry. Finally, to get triggered there. So it looks no hassle. These are just bars, and that price action swing won't affect me. Well, it does, and it shouldn't, but it will, and you just have to practice to minimize that impact on you. Best trick is completely avoid that chart, because you have bracket orders. You're safe. You're going to be triggered out either case for the profit or the stop, and don't follow the news about it. Don't look at it. It's the best way. It's stone cold, but it's the way you got to do it if you want to avoid being whipsawed because you changed your profit stop because you got scared or you got fearful. It breaks down the whole system, the whole framework. Either you respect it and you go for good to risk to reward, and you trust that you'll reach your target as regularly as you've proven that you can, and you stick by that. That's all about the psychology behind the trading, because just placing orders, that's like super easy, man. That's nothing. The hardest part is managing that stress and that anxiety you might have with a trade. You should have none. If the day you have none regularly and you just position your trades and like a robot, then you're on a pretty good track. All right, let's see what happened, and then after that, some more sideways action. And here we had, let me remove all those trend lines. After reaching that target, would have been triggered out either case. And right now we had another nice top pattern right here. Yeah, nice pattern. Measured move. Again, problem with this measured move is you're almost there to your target. So you wouldn't have had I wouldn't have entered according to my framework. But there's a breakdown there that reaches target. No, and you would have been triggered out. Your sell stop would have been just above this wick, and see this higher wick here. You would have got gobbled up. It does happen. It's not 100% playing monthly candles, but that's why you have money management. Don't lose more than 1% of your NAV on that trade. And moving on, and your target would have been reached there. When you have a candle that doesn't have a lot of body inside the pattern, that's not A++ setup. You want to be a little bit more protected under that important resistance line, support line. Sell stop a little more above would have been guaranteed you to stay in the trade. And right now, you would have been just a little bit inside. All right. And now the price action goes. Ooh. So we're today. That's how it looks like today. So this seems to have topped. During this 1-2 years consolidation. And now since mid-July 2017, it's been all the way down here. And where has it been down to? It's been down to previous important support right here at the, could say 15 level, or if you're more conservative, you could say 1430 level. That's important support right there. What are we going to do with that? Well, this is pretty steep decline. We don't know if this is the bottom yet. To know if this candle is the bottom, we need a green candle right there on the side. And then you know that you could start measuring bottom to bottom, then comparing those lower lows with our side. We have lower lows also. Right now we would have no bullish divergence. And what else do we have here? There you go. See, you had higher highs here between those two peaks, and here you had lower highs. Another confirmation of this, the move you already know that was coming, the downwards pressure, bearish divergence, with the price action going down. I'd set an alert right there for GE. And the reason I had this chart under my radar is because I probably sent an alert here back in the days and it got triggered. And over the weekend, I just popped open this chart and decided to take a look at it. All right, I don't even have a bullish scenario. Sometimes if you're in a range and you're hitting that support, I could say, okay, maybe if there's a bullish divergence, that might have a move going upwards. If it's a falling wedge, same thing. Here maybe on the weekly, somebody could make a case there's a falling wedge. And falling wedge is having targets measured move back to the start of it. All right, let's go take a look at it. The 5-year weekly, see if we have some clues. Where's my G? Okay, here it is. Sorry about that. All right, so here we are, 5-year weekly. And let me get some black space here. And 5-year weekly. You could see even this bearish continuation flag, breakdown, target reach almost immediately. And right now, even on the weekly, there's no, we don't know if this is a bottom. Could be. We just have to wait for this week to start and see where the price action is going to go. And the first test on its way back up, if it goes back up right now, will be the 1740 about area. That's where it's going to hit this wall, previous support turn resistance. And we'll see what happens. Will it range here, form a nice bottom over 1 year, 2 years? And that's the thing. You don't want to start calling bottoms. Sure, okay, it could be the lowest price for that 52-week average, 52-week period or whatever period. But you just don't want to be buying and being, after that, if it decides to consolidate for 3 years, what do you do now? What's your plan? You want to be in a trade the least length possible, the maximum chance of reaching your target. And that happens when you enter on breakouts or breakdowns. That's when the pattern's broken and you have the momentum and you go to the next support or resistance or wall area, but it's going to move freely. And until you have those patterns that start to jot out over time and break out, just getting in to say I called the bottom, but you're in there 5 years, I think your NAV could have been better used to something else. Especially if you deal with currencies that aren't yours. Let's say if you have Canadian broker, Canadian currency, base currency, and then you trade in US, well, you have to consider interest rates on the money you borrow to buy US stocks. versus the Canadian dollars, the amount you lend, the interest you're getting for that. Over time, especially with monthly candles, that could add up. You have to consider that in your money management protocols. All right, so the weekly, I'm just going to put an alert here. See if when it comes back up to here, 1740. I have my bearish. See if I'm going to hit again that bottom here at 1430. And I'll tell you, GE, time to turn off the lights. See you soon. Ciao.